Okay, guys and gals, about 10 seconds of the obligatory disclaimer. If you want to read the whole thing, just pause the video. All right, everybody, let's take a look and see what happened in the stock market today. We're looking at the E-mini S&P 500 futures. This is marked for the March 2022 contracts, /ES. You can also trade /MES, and that would be the E-micros. Really nice product for small accounts. Okay, we're looking at the daily chart here. You can see that the Tuesday session's already started as I'm doing this around 5 or 6 o'clock my time. So this is the session we're looking at right there. Big red day. I've been talking about this downward pressure from this going into this cycle right here, which ends right around Christmas. Some cycles have it on Christmas Eve, some have it after Christmas, but right around Christmas Eve, maybe a day or two after. Okay, for those that don't know about cycle analysis, usually when these cycles come together, like right here, you'll see price decline like we did right there. You can also see it happened over here, price decline right there. So prices came down into that, right? So we're expecting prices to potentially come down as we approach third or fourth week of December, okay? So keep that in mind. Right now, short-term indicators look like they're trying to roll over. Even the MACD might be joining in the fun here. So I think there's a better chance of prices declining and maybe even breaking below this 50-day moving average, which, you know, right now is at 45.86, but just keep in mind that this is a rising 50, right? See if I can get this to play nice here. So just keep in mind that's a rising 50. So if it does come below, you know, let's say it happens tomorrow or it might happen the next day, whatever, you know, it just depends on how this plays out. But I think there's at least a decent chance it'll break below the 50. Came down here today, kind of got close, and then had a nice little bounce back. Today was an awesome day to trade the indexes or the indices. S&P 500 certainly was very tradable today. Obviously, look at that candlestick. Okay, I think just for the general public, as I'm talking to you, okay, on this video on the daily chart, I think on the average prices will continue to decline. We may have a green day popping up here and there, but I think prices are going to track sideways or decline. You know, what we didn't do here is we didn't go to all-time new highs. And we'll see if we stay above that 50. I'm going to do this from daily to weekly today. Then we'll do monthly. Weekly looks weak. Okay. Red candlestick going on. Okay. Looks a little bit weak here. Okay. I mean, clearly these indicators are pointing down. MACD still just flat. But even the weekly chart here looks a little bit suspect for more price declines. Look at the monthly. Divergence warning still hot and heavy, even for December. Hot and heavy, red. Indicators are clearly pointing down here, down. MACD still now kind of looking like it's tracking sideways. So we'll see where this goes. Short term, things don't look like prices will go up, look like prices will stall, go down. Okay? So keeping this video really short, because I don't think this is a very difficult analysis, to be honest with you. Price decline, the probability of price decline for the immediate future, at least on the daily chart, is higher than price increase on the average. Okay? So what do I think about tomorrow? Well, I don't know. Tomorrow could be green, could be red. But the point is, on the average, I think prices will continue to either stall or go down, especially as we approach Christmas Eve, you know, that kind of late into the third week, fourth week of December. I think prices will decline down into this cycle low. We'll just have to see how far do they decline. They could also just stall, right? They could just be stalling in there and not necessarily decline. But so we'll keep a close eye on that. All right. Okay, premium members, let's take a look at the hourly chart for the S&P 500. Let's look at today, which started right there last night. Okay, the first thing that stands out to me right away, very first thing I'm taking a look at is where is it in relationship to the 50. I do that in every chart, and you should do the same. It's a really good practice. Well, it's below the 50. The hourly chart is below the 50, substantially below the 50. There's a big, huge buffer zone up here. Okay, and it's only gotten wider. Okay, so this, I think this candlestick here was 7 a.m. No, 3 a.m. my time, Texas time. Okay, that candlestick right there, guys and gals, especially for my friends over in Europe, was extremely tradable. About a third of the way down, as soon as it broke below that candlestick right there, or if you want to be super conservative, broke below that one, the bottom wick, so maybe halfway down, trade the heck out of it. Okay, so let's say half, that was 15 points, a little more, of trading, of profit. 15 points. Okay, even if you took one MES contract, you made good money. Okay, and there was no reason not to re-enter on this one right here. You don't even have to wait to get to below this candlestick because you're so far below the 50, just trade it. And that one too, and that one too, and that one too. Sure, there with these upper wicks, there's potential you might have to stop out because, you know, that's possible, but you just re-enter as soon as it gets below the body of that candlestick, okay? And here's the thing, guys. Pay attention to the MACD. See how it was widening? See how the gap here was widening? That's really strong information, okay? Helps you stay in the trade. Yeah, I know it's tough when the SMI gets below this line. You get a little nervous, okay? But the SMI is going to help you, the MACD is going to help you stay in the trade, okay? And then when you get this candlestick and it starts bouncing really hard, okay, you stop out. Maybe you even stop out up here. You're going to say, oh, but I gave back some money. So what? So what? Trading's not about finding the perfect bottom or perfect top. Stop trying to do that nonsense. Okay? You made money on this candlestick. You made money on this candlestick. You made money on that candlestick. You made money on this one and this one. And you gave some back on that one. Oh, well, that's trading. Get over it. Stop trying to be perfect. Just take the majority chunk of the profit and be a happy camper. I've talked about this so many times. Would you be happy with $100 a day? Think about it. $500 a week? Think about it. Multiply that by 52 weeks. I already know what it is in my head. Okay? About 25K. Would you be happy right now if, as we close December, get ready to close December, if your brokerage account was 25K higher than it was last year, would you be happy? Most people would say, yeah, that's a good year. And that's the way you have to think. It might be $50 a month, a day. It might be 25 for some people. It might be 200 or 300 or 500. Whatever it is. Okay? Be reasonable, be practical, be rational about your trading, be happy with profits. Okay? Some days are going to be better than others. Always use proper risk management. Okay? Quick look at the 5-minute. We'll move on to the other products. Okay? Okay, what can you say about this chart, guys? I mean, what's there to say? I talked about this on the Discord server today. This is a trader's dream. Okay? Trader's dream. Look at all this. Opportunity. Rejection. Rejection. Opportunity. Rejection here. Maybe that candlestick there. All the way down. Stop out. Wait. Enter back in right here. Take it all away. As it tracks sideways, you're watching paint. Just get out of any positions. Relax. Chill out. Re-enter right there. Okay? A little bit difficult to trade down this area. When it starts getting choppy like that, guys, I just don't trade it. Remember, this 5-minute chart, going by kind of fast. I just don't trade it. I just get out and chill out for a while. I'm watching the MACD has done its thing. It's kind of going flatlining, so I know that I'm not going to trade for a while. Just relax. Okay? It starts to get some legs under it. It's going the other direction, but I'm not going to trade long below the 50 on the 5-minute chart. And I see, look at this. Look at this. This helps you stay in the trade, so you're not getting, okay, forget about this indicator. Most people don't have that, obviously. But this keeps you in the trade and keeps you from making, I'm in and I'm out, and I'm in and I'm out, I'm in, I'm out of trades, I'm in and out, Stay with the MACD. These are helpful too, obviously, okay, with more granular entries and exits, okay. But I would have taken a trade right there. Okay, I might have jumped back out, then back in, then I'm making money, and I'm making money, and then I'm out, and then I'm in, and I'm making money, okay, to the moon house. I might not even get out on these red candlesticks. You want to know why? Because the MACD says don't get out. Look at the river. It's a canal. It's telling you stay in there, okay? And the SMI is like, oh, we're up here. We're happy. We're above the 40. We're above that line right there. We're happy. We're up here in happy land. Lots of money, guys, to be made on the hourly and the 5-minute. Okay, let's move on. I'm going to do all this in this video with timestamps and everything. for the whole shebang. We're going to change this up so everybody can just click links in the description below this video to get any product you want. S&P 500, crude oil, gold, okay, the grains, natural gas, all of it, okay? So let's move on to crude oil, okay? And let me go over to the daily. What do we got going on here? Okay, this is a, it should be obvious somewhere right around back then. When was that? Right about there was October 28th. Okay? What did October 28th tell us? It told us the MACD is rolling hard and the gap started to form. Okay? And if you wanted to play it super safe, you wouldn't have traded any of this on the daily until we got over here. But traders will be traders. Okay? And when I know I would have done, as soon as I begin to see that, I'm trading that, I'm trading that, I'm trading the bottom half, or at least the bottom third of that. I'm trading this one over here. I'm trading all these little guys here. Okay, I'm definitely trading that. There's going to be some stop outs. I'm stopping out there. I'm stopping out there. I might give some back depending on how much I'm paying attention. I'm making money there. I'm stopping out there. I'm making huge money here, obviously. Absolutely mammoth. Okay, absolutely huge day. Okay, money there, whatever. All these red days are money days. And why? Because the MACD tells you it is. Okay, it really is that simple. It is that simple. I think traders are a little bit too nervous, and I get it. It's not easy to trade. Okay, but after a while, guys, if you're looking at charts and technical charts, you're going to get so good at understanding when to stay in trades. As a matter of fact, to be honest with you, for you swing traders, entry somewhere around there, you just stay in that bad boy. You made thousands and thousands and thousands of dollars. You gotta have a stomach for it. Not everybody has a stomach for that kind of trading. Okay, let's look at the daily cycle. Normally these are green, so let me change this to green for the daily. And I just need to confirm that those cycles are actually still very good. So give me a moment here. Looking good, looking good. That's kind of a stall. Definitely good there. This one's a little bit weird. Okay, good, good. Pretty good. And then the back here it starts getting a little bit out of sync. That's okay. The further we go back, the less chances cycles will sync up. So we're more concerned about recent cycles. And how many sync up? Well, 1, 2, 3, 4. 4 out of 5 sync up. That's a really good ratio. We like 4 out of 5. Okay, good ratio. That means the cyclical patterns that we see here are very reliable. So let's take a look. Where did this one come in? What is the date on this? December 22nd, guys. That's the date right there, December 22nd. I would expect, on the average, on the daily chart, for prices to decline down into December 22nd. How far down? I don't know. But it doesn't really matter. Okay, this is starting to show strength. So there's some upward pressure there on the MACD, but the short-term indicators are still pointing down. Okay, so if I had to pick between the two, I'd say downward pressure will probably continue. We're really well below the 50-day here. It's crazy. Okay, it doesn't really matter so much how far down. I don't concern myself with price. I concern myself with opportunity, and so should you. Don't get caught up in price. Just pay attention to opportunity. Okay. Oh, I need to know the price levels. I need to draw my Fibonacci. And look at the Fibonacci. Oh my gosh, you know. Okay, use your Fibonacci. Use your support and resistance and whatever you do. And okay, fine, do it. I'm not going to tell you not to do it. Okay, they're helpful, I guess. Okay, I don't rely on that stuff too much, and I don't have to. Okay, I just take advantage of opportunity. And when you become a mature trader, you'll begin to take advantage of opportunity and not worry so much about Fibonacci retracements and kind of conjured up price points and stuff. They're not as important as people make them out to be. Okay, but so that's that. All right, let's take a look at the monthly for crude oil. Nothing's changed since yesterday. Got a lot of divergence warnings. These are pointing down. MACD's starting to pinch. I see crude oil has a good chance of breaking below the 50 on most of these charts, regardless of time frame. Okay, I said this yesterday. Now over on the weekly here, weekly chart. Looks like it might get a little bounce there, maybe on the weekly, but that looks like it's telling us a story. Okay, this thing is bouncing on the 50-week, trying to keep its head above water. Okay, crude oil looks susceptible to price decline. Look at the hourly. Okay, opportunity everywhere, especially below the 50. So here's the session that just closed. That's this entire area here. These are all hourly candlesticks. Okay, I'm trading that as soon as it got below the 50. I'm definitely trading all of that. All of that. I'm trading this. Okay, believe it or not, I'm trading that. Yes, it's green, and I probably broke even or stopped out for a small loss. I still would have traded it. Why? Because it's below the 50. And I can see prices are headed this way. I'm trading that. I'm trading that. Okay, I probably would have traded this and probably would have stopped out about a third of the way up and gave a little bit back. I wouldn't have traded any of that. Okay, and for the rest of the day, I'm just not trading that. Okay, and there you go. That's real trading. You will give some back. Stop freaking out about it. Just trade the big price movements. Don't worry about getting stopped out and giving a little bit back. Okay, get good at taking the majority of the profits. Let's move on to gold. Okay, oh my gosh, look at that hourly chart. We're going to come back to that. I talked about gold earlier in the day on the Discord server. I said I hope somebody took advantage of that. Okay, daily chart in gold. Lots of chop going on here, but it's below the 50. Slightly rising 50, just slightly. Okay, but all this chop going on day by day. Okay, there's still opportunity there. It's below the 50-day. Keep that in mind. Okay, MACD still's pointing down. Everything's still pointing down here. Okay, gold still looks weaker than it does stronger, especially below the 50. Let's go to the weekly chart. Okay, that's the story right here on the MAC. This happens a lot on a weekly chart. MACD doesn't really give you much until you get some big events like that. Okay, ignore these cycles for now. They're daily and hourly only. Okay, this is below the 50 and it's tracking below the 50 and it's finding resistance against the 50. You want support and resistance? There you go. Okay. And if you're like, well, if you get one of these scenarios, it's so far away, then go look at the shorter time frames. Okay, for your support and resistance on the 50. Even if you need to go all the way down to the 1 minute chart, that's fine. Do it. Okay, let's look at the hourly chart. Seriously, day trader's dream. Look at this. This was the session right here this entire time. These are all hourly candlesticks. What is there not to like? That we know the daily is below the 50, but not by much, so you got to be a little careful here, in my opinion. So I probably wouldn't have traded gold through all that. I probably would have had a hard time resisting trading that candlestick. I probably would have traded some of it. But why would anybody not trade this massive candlestick over a period of an hour? I mean, if you were being super safe, as soon as it got below that lower wick, okay, let me see what the range was. 14.7, so let's call that a third. Okay, that would be about, well, yeah, whatever. Okay, maybe 4 and a bit and some change. Okay, times 2, so 850. Well, 850 with the trading here. Huge. And then you got all of that. Yeah, there's some upper wicks there that are going to be challenging to deal with, okay? But look what you got in your favor here. Look what this indicator's telling you. Okay? Look at the size of this gap. Okay? So there's a lot of confidence you can trade. This is just, look at these other indicators. They're just kind of hanging around by the bottom line. Okay? So a lot of confidence to be able to trade this short even through this. Okay, gold should have been traded today. I hope people made good money trading gold. My goodness. We're not even going to look at the 5 minute chart. All it's going to show is even more opportunity. There's no reason even to look at it. Okay, let's switch over to natural gas. Let's look at the daily. Okay, the chop continues here for natural gas. Doesn't, you know, on the daily, I wouldn't trade it as a swing trade. I just still don't think it's very tradable on the daily chart. Okay, let's look at the weekly. Just sitting on that 50. And look at this, guys. Look at this. You'll like oats, natural gas is defying gravity right now. It's literally defying gravity. This thing is just begging to break below the 50. Begging. Look at this. Okay. That's my opinion. Because I only give opinions. I don't give financial advice. Natural gas is begging to break below the 50 week. Okay, let's look at the hourly. Okay, here you could trade it. And I've been talking about this for a few days. If you really must trade natural gas, you could trade it. I would trade it short, obviously, because we're, on the daily, just to confirm, on the daily, we're well below the 50. Look how far below the 50 we are here. Okay, there's some small signs of strength, but nothing's really confirmed yet, right? So in the hourly chart, if you feel compelled to trade natural gas, I would have traded, well, heck, guys, I'm trading that right there. I'm trading all of these. Okay. And when this hot opportunity came in right there on that MACD, when it opened up like that, I just stayed in the trade. If you're going to trade it, you trade it all the way down. Okay. And yeah, you're gonna stop out up in here somewhere and give back some profit. You know, you might stay in there for a while and give some back in there. Whatever. Okay, you don't sweat it. Just you got all this, and you probably got some of that right there. So don't sweat it that you gave some back. Okay, for you guys and gals out there that sweat losing on some trades and some positions, you gotta stop letting it get to you emotionally. Just relax, take some deep breaths. It's part of trading. You want 7 or 8 out of 10 trades to be winners, okay? And you want to take advantage of the big moves, okay? Big moves, take advantage of them, okay? MACD, guys. MACD, 50 moving average, provides information for both support and resistance. You could literally keep it that simple and make a lot of money. Okay? All right, let's move on to wheat. Okay, let's look at the daily. Wheat. Another one of these I'm going to defy gravity products. Also sitting on the 50. You notice that this time of year? Yeah, everybody notice how a lot of these products are sitting right on the 50? Just sitting there. Okay, this one's also defying gravity. Okay, defying gravity. Trying to stay above. Look at that. Okay. It's a rising 50, barely. Now it's beginning to flatten out. I think wheat has a decent chance of breaking below the 50-day. Yeah, I wouldn't trade it right now. You know, not on the daily, not as a swing trade. Yeah, I wouldn't trade as a swing trade. Monthly, some sign of weakness going on here. And we got divergence warnings. Okay, that dot for December, I think that's December. Yeah, so we got to wait, like I've been saying, to see if those dots stay there come January. If the dots are still there for December, we know something's up. Okay, for now, MACD says it's strong with a hint that there may be some price decline coming on the monthly. Okay, so we looked at the weekly. Or no, maybe we didn't. I'm sorry. Maybe I didn't. This week's got a little stall in pricing. I don't believe it. I don't think it's going to be sustainable. I think this is due for more price decline. Could be wrong. Very strong rising 50 here, like super strong. So that can't be ignored. We're going to see if this comes down and gets somewhere near the 50. Does it get down into here over the next few weeks? Whatever. Does it give it a bounce? What's going to happen here? Looks like even in the weekly chart, price declines could happen more than price increase. Okay, here's the hourly chart. Today, last night it was tradable there, and there. And as soon as it approached the 50, I would have not traded anymore. And to be honest with you, I would not have traded this today. There's nothing to trade here. I wouldn't trade it. Last night, for those first few hours, yeah. Okay. And I know someone will say, "Oh, you said don't trade above the 50." And that's true. I normally don't trade short above 50. I normally wouldn't do that. But this is looking really weak, and this is pointing down. So if you really had to trade it on the hourly, yeah, I would have traded those first few hours right there. The rest of the day, I wouldn't have touched wheat. Okay. The rest of the session, I should say. Okay, let's take a look at oats and finish this up. Okay. Let's look at oats. I think oats had a little bit of a green day. Yeah, a green day on oats. Small green day on oats. Trying really hard to stay above the 50-day. Amazing. This product is defying gravity. That's like been the word of the week. Continues to defy gravity. I don't know how. Crazy. Everything says it's going to break below the 50-day. It's just sitting on it. Another product, yet again, sitting on the 50. Let's look at the weekly. Look at that. It's like trying to hold back a flood. Look at this. This. With all kinds of divergence warnings going on. I don't know. Maybe we're at a bottom. And seriously, but it doesn't look like one. I'm trying to understand what's going on with oats. Yes, I hold one contract on oats. There's nothing here that says I'm at a bottom. Nothing. This doesn't look like a bottom, though it could be. That doesn't look like a bottom. That certainly doesn't look like a bottom. That doesn't look like a bottom. Divergence warnings popping up over the place. I don't think we're at a bottom. If we are, if oats goes up from here, like breaks all-time new highs, it will simply defy everything about technical analysis. Okay. But there is one thing that oats, it could, and the reason why I mentioned all that is because oats has now officially, within 6 days, will be at a supposed cycle low. But as I said before, oats doesn't really have very definable cycles. They're just not well defined. So I don't put a lot of credence in this daily cycle. But what do you know? Here comes red right near the cycle low. It's amazing how good cycle analysis is, guys. So just because of this alone, I'm cautious that prices could go that way. It could happen. Everything else is telling us no, but the daily cycle in about a week or two could do this. All right, let's look at, in the weekly cycle. So March 22 contracts, keep an eye on that. And look at the monthly. Monthly. To the moon, Alice. Lots of divergence warnings here, though. Okay. Forget about these arcs. They got nothing to do with the monthly. That's only daily. Okay, so anyway, going back to the weekly here. I think I'll... Okay, yeah. Okay. Yeah, so on the monthly, back to the monthly for a second. Yeah, a lot of divergence warnings. Enough going on to get my attention. And prices look like they want to do this. We'll see what happens. Okay. Hourly, just to kind of get a feel for entry. If you really wanted to take a trade, yeah, obviously you'd want to take a trade when it's well above the 50-hour if you believe it's going to go short, right? That weekly chart and now the daily chart have my attention. I'm just waiting to see if this thing breaks below the 50, and I think it's very possible that it will. That's it for all the futures products. Don't forget the description below this video will have the links for each of the products. Just click on it to get whatever product you want. Talk to you all real soon again next time.